Hello everyone, George DeSantis here with a look at the market for the week ending October 21st, 2016. Let's take a look at the disclaimer first. Uh, Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. Let's take a look at the first chart, which is the monthly chart of the S&P. As we see here, the monthly chart of the S&P 500 is still in an uptrend, since the definition of the uptrend in this case is the position of the relative positions of the Kalman filter and the instantaneous trend line. So the Kalman filter is still above the instantaneous trend line, so we'll call it an uptrend on the longer term chart, which is the monthly chart. The parabolic is still below the most recent bar, so there's no indication to switch to a downtrend on this long-term chart. Now, the MACD, moving average convergence divergence, slightly negative, minus 0.6. It's really indicative of the fact that the market has been in a real trading range for a long time. So Elder Force at the bottom of the chart is trending down still, and nothing much has changed during the last 3 weeks of this month. So let's take a look at the weekly chart. Here's a weekly chart of the S&P 500 that we usually look at. We can see here that we found support at the instantaneous trend line back here in July. When we found support here again sometime in September, rallied up just slightly to what one might call a false breakout, and then pulled back toward the instantaneous trend line once again. We had this bearish candle, and now we have this candle here for last week, which is really an inside bar. If you look carefully, you'll see that this body is really engulfed by this entire body here. So we have an inside bar, or what in candlestick technology is called a pregnant woman, or bullish harami, really a bullish harami. The interesting thing to note here is that the parabolic has now switched to go above the most recent bar, last week's bar. So parabolic is suggesting a switch in the trend to a downtrend on the weekly chart. So we need to keep our eyes open on that. Notice the previous week the parabolic was hit. It's inside this body here. We could hardly see it because it's covered by the instantaneous trend line. But now, as I mentioned last week, in anticipation of this, the parabolic has switched to being above the last week's bar. So now we have a signal for a downtrend on the weekly chart by parabolic. However, the instantaneous trend line has not been crossed by the Kalman filter yet. It's sitting right there, right above the instantaneous trend line. If we look at the bottom, at the middle of the chart here, we see RSI 12 once again bumped off slightly off of the 50% line. So as far as RSI 12 is concerned, a very good trend indicator, especially on the weekly chart, we are still in an uptrend. We'll see how this develops. I mean, if the market really starts turning against us here, well, we have to recalculate. MACD is in bearish territory. It is at minus 6.96. We see that the fast average crossed below the slow average, and we continue to trend down here. So MACD is telling us the bulls are slightly in charge here. At the bottom of the chart, percent R trended up a little bit last week, since we had this doji here, this very small body doji. So all in all, this chart, the weekly chart of the S&P, is at a critical juncture. It remains there. We still can't break out of this trading range. We have a triangle here, and we haven't really broken one way or the other. So we'll see how this develops in the coming weeks. Let's take a look at the daily chart. Here's a daily chart of the S&P 500. We've seen this one before. A couple of things here. We notice that the parabolic switched to being above the price bars, and it remains above the price bars, indicating that as far as parabolic is concerned, that there is now a downtrend. We also note that the 9 EMA crossed below the 30 weighted moving average, signaling a switch to a downtrend here, just about the same time as the parabolic signaled a downtrend. So we've done that. We've made a double bottom, and we trended up a bit last week. We now have a hammer, and we have another triangle. Well, I calculated a target from that triangle, this ABCD triangle, and target is 2197. Notice it's pretty close to that 2200 mark that we've seen so many times as resistance. So the daily chart is in a downtrend, and it remains to be seen whether this hammer here is signaling a hammering out of a bottom. We still have this double bottom in place, so it's quite possible we might rally from here. However, that's to be determined. This market is really in a very, very long trading range. So let's take a look at RSI 12. It's bumped off the 40% line. That's encouraging from the bullish standpoint. Larry Williams pro buying indicator formula is very simple. It's here. It was trending down, making lower highs. Now it seemed to have broken that trend line. So that's encouraging from a bullish standpoint. Percent R bumped off the 20% line. It hasn't crossed above the 50% line, but it's hovering around 40% here now. So as far as the daily chart is concerned, technically, with the 930 approach, the 9 EMA and 30 weighted moving average, we are in a downtrend. What we wait to see now is if, as a result of this symmetrical triangle and this hammer, we break to the upside, or whether we continue to go lower from here. I'm betting that we break higher. Okay? So let's take a look at something else. Here's a weekly chart of the NASDAQ composite. And we still have the Kalman filter above the instantaneous trend line. So technically, we're still in an uptrend on the NASDAQ. And as I mentioned so many times before, many people say that the NASDAQ leads the rest of the market. If that's the case, this is encouraging from a bullish standpoint. What we see here now is that we have a bullish Harami inside bar. The body of this bar or candlestick is totally engulfed by this. So we do have a bullish Harami. The parabolic in this case is still below the most recent bar, coming pretty close to it. So it's possible we might just hit it in the next week or so, and perhaps come further down toward the instantaneous trend line to test it once more. That again to be determined. RSI 12, on the other hand, is hovering around the 60% line. It's still telling us that this is an uptrend, the weekly chart of NASDAQ. And MACD is just slightly positive, 1.88. So it's just slightly positive above the zero line. The market is really struggling to make a new high. I'm betting that it will in the coming weeks. Of course, we're running into the election week, which is, most people say, treacherous territory. I don't believe it's going to affect the market one way or the other, but we'll see how that develops too. Let's take a look at something else. Here's a daily chart of the NASDAQ composite. What we find here is that the Kalman filter is below the instantaneous trend line. So technically, we're still in a downtrend, although the bears seem to have been losing some strength, because when you look at MACD, it's starting to trend up from below the zero line, MACD histogram. So we also have a triangle. If we plotted this point to this point, and from here to here, we'd see that we have a symmetrical triangle. Symmetrical in quotes, let's face it. On the other side of the coin, we have parabolic still above the most recent bar. And then this bar is a bullish candle because it's engulfing this candle, this body of this candle here. This is pretty much a hammer. So the indication is, yes, we do have parabolic above the most recent bar, indication a downtrend. However, there are a few bullish indications here too, with the triangle and with the hammer and the engulfing candlestick here, and MACD trending up from below the zero line. So it's quite possible that this market, this Nasdaq daily chart, is going to show us some more strength in the coming weeks or so. Of course, we're running into the election, and we'll see how that develops. Let's take a look. And here's another chart of the S&P 500, a daily chart. I wanted to take a look at this one also because we have MACD showing us a bullish divergence from price. In other words, we made a low here, we made a slightly lower low, and MACD made a low but a higher low. So bears have been losing their strength here on this downtrend as we see it here, this piece here. So we saw this configuration before. The only thing we didn't see before is the relationship of the Bollinger Bands. We can see now Bollinger Bands are entering a squeeze. So we can look for a more dramatic movement, either up or down. We really don't know what the direction would be, but we know that usually when you have a squeeze like this, we get a little more dramatic movement as we did here. Okay, so we have to keep an eye on the movement here, because we can go either up or down. Again, I am thinking that this double bottom will hold, but that's only a conjecture. We'll have to wait and see how that develops. A percent R at the bottom of the chart here, which is a 30 period percent R, is bumping off the 20% line. We saw that before, so this is encouraging. I just wanted to mention this divergence of MACD on the daily chart once more, as I did last week. So let's take a look at something else. And here's that best choice chart, 6-month chart that I often show you. And it's really a regression channel, you can see that. So the price is now sitting, the S&P is now sitting at about the 10% line. Usually that's an oversold indication. So again, we'll see if this is going to hold up as an indication that the market goes higher. Typically, we'll get at least a 50%, a move up to the 50% line, and that comes in at 2184. So again, we're pretty close to that 2200 level for the S&P. Of course, it's possible to go all the way up to the 90% level, which would be 2227 or somewhere around there. So here's what we have with best choice. The chart is showing us that the S&P is quite oversold insofar as the 6-month chart is concerned. Let's take a look at the impulse bars now. Now here we have the stockcharts.com chart with Alex Elder's impulse bars colored red, green, and blue. And we should take a look at the right side of the screen, and we see that the daily chart has a blue bar. And we can see that divergence of MACD is there. We have a downtrend because 9 is below the 30. However, on the weekly chart, we will find that on the weekly chart we have a red bar. However, it seems as though we might find some support here at the 30 weighted moving average. The red line in this case is the 30 weighted moving average. We'll see if that occurs. So I'm going to say call it quits for this week, and see you next week. But basically, the long-term chart is bullish. The multi-chart, the weekly chart is still bullish, but showing some weakness. We'll see how this all develops. Have a nice week.